I think a 45, 4700, you might consider playing safe. I don't think so. I mean, it's only 700, 800 points off from here. But I think I'd be very surprised even if 47, 4750 gets taken out for any length of time.
You said the year might be marked with low volatility, which is a departure from what other people are saying.
Right.
The VIX is already at 1920. You think it will not rear its head through 2010? It's
I tell you, the markets are surprising us. And let me take a few things that have happened which indicate this. Everybody said that the corporate fundamentals must follow an economic recovery, after which comes liquidity because people have risk appetite. Now it's exactly the opposite. Money has flowed into sectors that were most unlikely to get money. A Suzlon getting money, Unitech getting money, all happened well before there were any signs of recovery. These all happened in May, June, by the way. After which the companies started sort of showing better fundamentals, at least in terms of debt reduction, in terms of promoters pulling out their pledged shares, if you will. You know, the sort of reporting that goes on. After that has come marked signs of improvement in the economy. So sometimes traditional economics is turned on its head, and if you look back at the empirical evidence of what's happened, it's been money that's first come in, then the corporate fundamentals have sensed a change, and then the economy has moved. That's one departure from the past. The second departure is everybody had either, as I said, a L-shaped, U-shaped, V-shaped kind of thing. Maybe it's going to be completely different. And I had a different take on that. My fundamental bullishness through the last year has been not because I had, sensed bullishness because of certain inputs, but more because of what the masses were thinking. And I saw anxiety, I saw caution, and I saw bearishness. So the flip side of all this was some bullishness. Everyone's talking about higher volatility. And I think the screen is telling you today that, as of today or a couple of days ago, we are close to a 5300 on the Nifty. And a 5400 call with almost a full month going is going at 55, 60 bucks. So we're not even sensing a 2-3% move with any clarity. So there are not enough buyers or adequate buyers for a 5400 call at more than 55, 60 bucks. Tells me that volatility, the base has been set. And why intuitively should volatility be low? Because every balance sheet and economy, in a sense, the government of India, through its divestment program, or corporates through their QIPs and their GDR programs, are raising money, in a sense creating a base. Most of this is for balance sheet repair or some growth, but really for some kind of an insurance money. People aren't talking about aggressive expansions. When do balance sheets have volatility? When you have aggressive expansion, aggressive leverage. Now people are going the exact opposite. So if the balance sheet of companies and the balance sheet of the country is getting cushioned by equity issuances, then by definition volatility in the environment must be low. And that's exactly what's happening. I think there's a fair degree of predictability that the US will be unable to raise interest rates. The short dollar trade, to my mind, may have played out. We may be in a range of, say, 75 to 80 for the short run. Really speaking, most of the negatives have played out. People feel the markets have played out the positives. I genuinely feel that if there is a sharp dip, there are buyers waiting, so the sharp dip may not happen. The runaway boom is not happening because people are not committed. And I don't think people are jumping in a hurry. So the net result of all this is, I feel low volatility, with dips being bought into, and any sharp move being sold into by people who invested. So there is, to my mind, a fairly balanced kind of scenario. This is going to be a year where corporate finance will be very, very active. This is a year when companies will be seeking to put themselves on the radar, and new stocks, new companies will come into focus, which means new sectors. We've already seen it. In an era of last 24 months where fresh issuances like IPOs were met with either a lukewarm response or a negative response, and all issuances listed at below par. You had one Cox and Kings, which came and blazed its way. Whatever reason, people just liked a fresh whiff of fresh air, if you will. So a new space like a travel and tourism, new space like logistics. None of this is index based, right? Sure. And the index is well covered. So I think on one hand you have low volatility, on the other hand you have exciting new spaces to look at, which are either logistics, maybe a result of various things. The offshore industry, shipping industry, neglected spaces. I think these are things that we should, the shipyards industry, these are industries that we should be looking at for new ideas. Marine logistics, for instance. I mean, I can go through multiple spaces. So I think it's going to be a year where you need to sort of kick the tires, need to be out there with companies. It's not going to be a year of volatility. The Nifty play, to my mind, is going to be pretty much dead in terms of there's not going to be sharp moves. But I think I'm very excited about the corporate finance work that we have. I'm excited about the kind of portfolio selection we can make.
So you found your new Aban for 2010? Don't say it's Aban again, you said it last year.
I said it last time. Well, thankfully it sort of bore me out in a sense. I think Aban's on a good decision. I think there are quite a few spaces that are exciting. I mean, people looked at, and I'm going to give the disclosure that we have some or all, a lot of interest in all of these. I think a Bharti shipyard has pulled off a major coup with the acquisition. And my feeling is that on a consolidated basis, we see a 90 or 100 rupee earning. So 235, 230 or whatever the price is, it's about 2.5 times. It's in the same place where Aban was a year after acquiring Sinvest. Aban didn't dilute, that was a different issue. Maybe Bharti, through the receipt of subsidy from the shipping side, may well have an automatic deleveraging of the process. But the most important thing is the full integration of shipyards down to actual deployment of the offshore vessels. Because now the shipyard business, which is very, very volatile, may actually have been dampened. Here's one more case why this acquisition may actually dampen. We think a Bharti could be a serious multi-bagger from here, Bharti shipyards. The second, we think, I don't know if it's a multi-bagger, but a space that people looked at Cox and Kings. We think Thomas Cook has been rubbished by the street being a 1 rupee earner, 1.5 rupees. I think their next year earnings could surprise. Our own estimates are that they could do a 4.5, 5 rupee earning. And if that comes through, this could be a 150 rupee stock, especially given our bullishness on the fact that the consumer discretionary, consumer spending could be the way forward. And travel tourism is an entire, if auto is one indication of that, the next level derivative will be travel and tourism.
So between the two, you would root for Thomas Cook now, between Cox and Kings and Thomas Cook?
No question. Thomas Cook all the way, I would say. That's another space. Companies which are in the logistics space, I mean, there are a few names again. And we are doing some work. We have one or two that we are looking at, which could be serious plays for the current year. In terms of multi-baggers, I think we'll need to look at some of the fallen angels of the past. Like the IT space in the
Midcap IT still?
I think, again, I don't want to say midcap IT as a broad brush because that's deceptive. We are doing work on a few, so it's kind of early. Maybe 2 months from today, one could look at spaces that, and these are not as though that a multi-bagger has happened and then we are talking about it. We are looking for some which could actually be serious multi-baggers going forward. And I think there are one or two that we are working on that could be interesting in the weeks or months to come.
You said shipping. You still see value in that space?
I think not so much as shipping, but those that are integrated. I think, for instance, if you take Great Eastern Shipping, we think their offshore subsidiary, which is Great Ship India, will have significant more value. And we understand that they may be contemplating going public. If that happens, I think it will dramatically re-rate the parent company. So the parent company shipping volatile income stream may get dampened, in fact substantially enhanced through the offshore subsidiary. So I think intuitively balance sheets, people are looking at that kind of thing. So while I am not that bullish on shipping, but I am bullish on the shipyard space, especially if integrated, or in the offshore space.
At this point, a quick break. When we come back, there's more on Crystal Ball 2010. N. Jayakumar of Prime Securities is speaking to me. Come right back.